Thanks so much for coming. I'm Natalie Levy with She's Independent Investments. This is our introduction to angel investing discussion and workshop. We are so glad you're here. You do not need to be an expert. You do not need to know anything about angel investing, or you could already have some investments under your belt. This is really about participating and engaging and starting to learn some new topics, skills, think through, what's my pathing, even if you've already started to build a portfolio. So a little bit about me to kick this off. I have a background in institutional finance. I worked on Wall Street. I worked in private equity. I've been angel investing for a number of years now, over a decade, and I've had some real wins. But I am not today here to say to you, you're going to make a bunch of money by angel investing, right? There is potential upside, but that's not the point of today. We're going to talk about the concepts, the fundamentals. But what I want to share a little bit more about is my journey and, why I do what I do today. And if you've, read anything about our story at She's Independent, I do share openly about mental health and, some losses, some significant losses, including my mother in our family. And my story wasn't a, Natalie, we'll promote you and we'll give you all these things. It was, Natalie, work really hard, keep your head down. You're not deserving of that. Where they were giving it to the men around me that looked a certain way, who hadn't done it before and didn't have the skills, because I didn't look like the executive team. Me Too's, harassment, you name it. And my story has really allowed me to develop myself and resilience and recognize the importance of self-advocacy and women showing up, not just for other women, but for ourselves. And so I just start with my why, because when you have a powerful why, you're always going to find the way or the thing, right? I'm not going to sit here and say, make a bunch of money and that's going to make you happy. Sure, money can give you resources, but what I will tell you is that when you uncover and when you start to work and align with and invest in ways that align with your why, it's game changing. And so my why today is the Me Too's, the moments I've been through, the glass ceilings that, I couldn't shatter when I was in the workforce, that now I've completely disintegrated. And now it's getting to, levels above that glass ceiling, boardrooms, being an investor, on various cap tables. It's for my mom. It's for women, all over the place. It's for young girls. And it's so that hopefully at some point, we're not talking about the massive inequities that exist, but we're talking about gender equity, and we're talking about showing up and celebrating ourselves and women everywhere. So what are we going to talk about today? Investing, of course. We're going to talk about the basics, right? Why should you think about investing if you're not investing today? How do you start breaking down and thinking through writing a check, or maybe not writing a check? When is it too risky? What do we look for when we write investment checks from our angel group? And then how might you want to get started? And it's not for everyone, or maybe it's something that you're mapping a path to, for years to come. And again, I encourage all questions or participation at any point. Let's start with the inequity and the gaps that exist today. We all hear about the wage gap, and the wage gap is massive and it's atrocious, and I hate it. But there are these other gaps that are even more significant. It's the funding flows, it's the money gaps, it's the equity ownership, it's the lack of women on boards. Less than 2% of venture funding goes to women-owned businesses. That's a stat from 2022. Less than 1% when we're talking about women of color. What products and companies are not getting funded? What do we need to see in the world that when you don't have folks like us, women showing up to invest, what is not getting funded, right? What products are we using on a daily, like seatbelts in our cars that were designed for men, or over-the-counter medications, right? Women need a voice. We need influence. And so why should you start thinking about investing, right? Why am I so jazzed up and so excited about this topic and this, ecosystem that we play in? I'm not just excited about, the products, even though I am excited about what we can bring to market, but you individually, you will learn so much by stepping into this arena. Even if you're not writing the checks from day one, even if you're just participating and learning alongside, the knowledge and tools are substantial. It could be building deeper knowledge in an industry you already know. It could be picking up knowledge in a new industry. What do investors look for? Maybe you're a founder and it's, oh, well, I want to be better at, positioning my company for fundraising. Network and access. You will be in rooms that you won't believe you can be a part of. And we'll talk about different ways and different exposures to, investing, but by being an angel, you can be in these rooms. It's not just reading some static piece of paper from some other investor or crowdfunding campaign. You can be in the rooms asking the questions. Career advancement and career pathing, getting more strategic and intentional with what you're doing and what your roles are. And your mindset and authority. How often do we hear about imposter phenomenon? It's not a syndrome, it's a phenomenon, right? How much are we trying to unwrap and say, well, I can do this. I can have the confidence. When you start showing up and writing checks as an angel, your mindset truly transforms. And so a few more things to think about. The investors that step into these deals are getting rewarded in ways that you're not getting rewarded otherwise. Meaning, if you're stepping into equity compensation with your employer, you have to wait maybe a year for that to start to vest and 4 years to get ownership. And by the way, when you really back into what you got, it's probably not even worth that much. Where you could have written that check for $10,000 or $15,000, immediate ownership. You're not waiting and you're not, showing up every day, blood, sweat, and tears, trying to get that ownership. You can write the check if you have the capital, and that's immediate ownership. How much do you have in that one company you work with, or those 2 companies, or that company you started? Diversification matters. How many companies are you going to be able to spend the 4 years or however many years, building up the equity? If you do have the capital, if you can write the checks, it is less time intensive. Influence. You have a voice. What's happening in this company? Why aren't we seeing, you operate in this way? Where's the diversity? Where's the representation? You can have real influence as an investor and in operations. And then professional growth. Again, that skill development, opening doors. So some of these may feel a little repeat, but it's just so significant. We want to make sure that you understand what it means if you step into the arena as an angel investor. So let's define and break down equity. What is it? And we hear the term all the time, but let's talk about it in terms of ownership. If you are an equity owner in a company, you own a piece in that company. If you're just an employee and you don't have equity, right? You're maybe getting paid, salary, bonuses, some other kinds of, compensation. But if the company sells and if it grows and if you're a part of that, don't you want to receive something if the company ultimately exits or has, some really great liquidity event? If you have equity or if you have ownership in that business, you have the participation in the upside. A possible liquidity event. And I say possible because I wouldn't say that necessarily you will get a payout. Some companies don't work out. Some companies never have the exit. Some companies shutter their doors. A possible liquidity event. And the fourth point here, we're not going to go into it in this discussion today, but it is interesting to note, it is cheaper for a company to give away equity than cash. So if you're negotiating, and that's a whole separate discussion, but just recognizing it's cheaper for the company to give away. And for example, a company may be hiring, executives at the earliest stages, and they're giving away good equity compensation or ownership and smaller salaries, right? That's something you'll typically see. All right, types of investments. What are we talking about today? We're talking about private companies, and there's all different types of investments out there. And this slide is really just to indicate or, kind of remind you of there's all different types of, investments that you can make. We're focusing on private companies today. And by the way, some people at our investment group, I love it. They invest in real estate. They invest in royalty streams. They may invest in NFTs. We're all probably invested in public markets, those who are doing angel investing, but we're really going to focus on private. And understanding, what is private and where am I investing? There's the whole breaking down of understanding what's the investing ecosystem, right? What's the fundraise? Angel is typically on the earliest spectrum of investing. Maybe there's a friends and family, but angel investing is typically before institutional or professional investors play, maybe alongside institutional or professional investors. But there's basically different stages that happen. A company may be bootstrapped or may not raise capital and may choose to at some point, but there are these standard terms: pre-seed, seed, seed plus, Series A, Series B, Series C. Maybe they go public at some point, right? These are the standard terms. Our investment group, She's Independent Investments, typically focuses on seed plus, meaning not the earliest. We want to see some traction, but they don't need, $1 million of top line, and they don't even need $100,000 of top line revenue. Understanding where you're investing or what you're scoping, right? Where is the business? What stage? What are they doing with that fundraise? All really important pieces to stepping in as an angel. By the way, we can't cover everything in an hour. So some of these are going to be concepts that hopefully are going to start to teach you something, but of course you can dig in further, and we'll do, additional supporting sessions like office hours where you can ask more questions if you don't ask them today. All right, investment instruments. How do you get exposure as an angel investor? So I have several different ways that you can get exposure up on this slide. I will say that shares or RSUs are not something that an angel investor would, get for writing a check, but that's something that your employer may give you. But options are another example of, something your employer may give you. When you invest as an angel, you're either going to have equity ownership, or you might invest in something called a convertible note or a SAFE, which is a type of and form of convertible note. And this will convert to equity based on a future funding event. And that gives you immediate ownership. I have shares and options here because, again, we talk about these things so you understand what they are, but we're not going to break them down in today's discussion. So as an investor, you're going to get immediate ownership, and that's going to be based on the terms of the raise. What kind of vehicle are they using to raise capital? And before I actually get off that last slide, let me make another statement, which is when you invest in, or you have access to shares of a publicly traded company, right? And I have a picture up here of, the NASDAQ, you can see where it's trading. When we're talking private companies, you're immediately lacking transparency. You're getting the information from the business. You, of course, can perform diligence and screening and all those things, but it's not a traded market where you can see, I can't pull up the share price when it's a private company. There is maybe a term sheet and, instructions for, and this is where the valuation or the share price is trading, but it's not something that you can pull up on Yahoo Finance, as I did with the NASDAQ here. All right, valuations. This is a really fun topic and also a scary one, right? What drives a valuation? How many of you have followed crypto implosions and NFTs going to nothing that used to be worth, $1 million, right? I'm going to start there because honestly, so much is the story, and it's really all based on investor supply and demand. What will somebody pay for it? I was just talking to somebody the other day about art as an asset class and how, some of these really well-known, just fantastic artists, trade for, millions and millions of dollars. And the discussion was, how is that different than an NFT? And I said, well, they're established and they've had this track record, but at the end of the day, it's what people are willing to pay for it. So even if I think NFTs are silly, if somebody else will pay $1 million for that, digital gorilla and the rights to it, that's what it's worth. What typically drives a valuation when you're talking to sophisticated investors, professional investors, they're looking at the size of the business. How much money does it bring in? What's the profitability? What's the growth? Early stage businesses, the story is extremely impactful. Valuation, honestly, it's tough. If they're not making anything yet, they don't have any revenues, they don't have, real growth numbers that matter. So much is story. It could be a hyped market. Y Combinator, which is a really big accelerator that brings companies, into the ecosystem and connects them with investors, are raising at really high valuations. And it's partially because their network and their advice to these founders is, raise at these valuations and you can do it. I have thoughts on, why that isn't necessarily the right move, but the market sentiment and how the founder brings the company to market, that all can impact, valuation at the end of the day. I have up a bullet point on this slide saying tulip mania. One of the first known asset bubbles, it was tulips, the flowers, okay? Reminding you anything can have a value and can be an explosive value if people, believe the story and if they think it's worth that. So it's the reminder of, right, what's it worth? I'm not going to put my money in a deal unless I see other good money or other money going in and we agree on the valuation. They can, raise good capital. They're going to have a runway so that they can, operate and, hit these goals they've set out. I'm not going to write just my check. I need to know that they can fundraise and that valuation makes sense, right? So I'm not going to be the only money in. You're waiting to say, okay, great. Can you close this round? And, reasonably, do we think there's an expectation that you can execute this business? Let's talk about ownership. If you write a check for $10,000 at a $6 million post, meaning after the money is put into the business, it's worth $6 million based on the terms, you have a 0.16% position in that business, assuming no additional funds raised, right? And typically there are going to be additional funds raised after that seed or, pre-seed or whatever that angel round is, but assuming no dilution, meaning no additional funds raised, if the business exits for $500 million, your $10,000 goes to $833,000. That's an 83 times return. If you invested that same $10,000 at a 30 million post, your returns look significantly different. 0.03% ends up being 167,000. So not shabby at 17x, but nothing like that 83x. What is my point on this slide? The valuation matters and the exit matters, right? These are simple calculations. But as an example, if it's a medical device and we think there could be a $50 million exit, we're not going to invest at a 25 million post. Only a 2x, and all these things have to, matter for that to play out. So playing early, playing as an angel, investing at these, $10 million post type valuations, great. Sometimes we do invest when it's a 30 million post, but that's a massive market. We are looking for big deals. We are looking for big exits, not too niche. And we're making sure that there's a trajectory of, because there is real risk here, what happens if it works? What is my payout? So what else are we looking for? I mentioned a big addressable market, right? Founders and team, I'd say, are probably the most critical at the angel round or the angel stage for me. Who are they? Why are they doing it? What's their background? Is there real alignment? Because building a business is so hard. So hard. What's going to happen when, they're struggling? What's going to happen when they need to reinvent what they're doing? What's going to happen when they can't get the bigger salary that they wanted because, they're still working to make the thing happen? Is this team going to make it work? And is this the right team? Because the idea alone, interesting, but the team behind the idea or with the idea, the team that's executing, that's what I care about. Traction and resources. They don't need revenues for us to de-risk or remove risk, meaning there's still a lot that we can ask and learn, even if they don't have revenues today. And if, by the way, they're, bringing something to market, have they done the real market research? Is this something that they just dreamed up, or is there a real need for it? I can't tell you how many create something just because, and there's no actual demand, right? Dig in, figure this stuff out. In our diligence, we're jumping on customer or prospect calls. We're jumping on partner calls, right? As a part of diligence. And risks and execution. what are they doing? What are their plans? If they're raising that $1 million and they're talking about, hires, have they identified the people that they're going to bring on? Team matters so much. How much execution can we see during that raise? Because if they can't raise well, where else are they falling in terms of execution, right? As an angel, I love seeing a good lead, meaning somebody that's doing, the deepest of diligence, navigating what is the term sheet, the valuation, all of that, the terms of the round. In a tough market environment like we are in today, it's August 2023. What's the runway? What are your plans? I don't want you to be raising for, a 6-month runway. I want you to have well over a year runway. Meaning, how long can you keep the lights on with this raise? By the way, again, not covering all the points, just covering some of them. So there are a lot of ways to get started with ownership. First of all, in the US, you have to be an accredited investor if you're going to invest in these private companies as an angel. There are multiple definitions. I'll give you the high-level definitions, but you, of course, can read from the SEC, again, if you're in the States, what that looks like. But if it's an individual, you need to earn $200,000 over the last 2 years of income, or have $1 million of net worth, not including your primary residence. As a couple, it needs to be $300,000 of income over the last 2 years. And there was recently an update where something's coming, but basically there's going to be a test of if you have enough knowledge, you can still be accredited even without the wealth requirements. And there are also, if you're in the financial, space, there are other ways that you can, be an accredited investor. By the way, you can also invest if you're in the rest of the world and not in the US, but these are definitions that I'm sharing for our US-based investors. So how do you get started? What if you don't want to write a check today, or what if you can't because you're not yet accredited? How about that employer equity? Understanding valuations, understanding your worth, understanding, what is your role and how to talk through equity ownership. And again, that's a separate discussion. We're not going to go deeply into it today, but you can start getting sizable positions even before you write checks as an investor. Maybe advisory equity, maybe, board equity. And the expectations around what you can ask for and being able to get substantial positions, that all goes back into, are you thinking like an investor? Do you understand what you're talking about? You're never going to be able to navigate into, a substantial package if you're not asking the right questions and if you don't understand these valuations. And then how to think about evaluation, right? Private companies, you only get so much information. Even before you meet a company, let's just say you're going to interview with them or you're working with them. If you're not asking basic questions like, what is the revenue? What is the burn? What is the growth? You may have absolutely no idea. A simple question you can ask is, what was your last valuation? Or what do you expect your next valuation to be or trade at? And then we got a question in the chat. It looks like, what are the typical angel investment amounts if there is such a thing? Great question. I would say angel investment checks, it depends on the founder and what they're open to accepting. And so some founders will only accept $100,000 minimum. Some, if it's a later round, it might be $250,000. But for early rounds, we've seen everything from $2,500 to $10,000 to, $15,000 and $25,000. What's interesting about an angel group, because we form an investment vehicle called a syndication, is we can take checks as low as $2,500, even if they need a check for $100,000, meaning we can pool the investments. So let's talk about stepping into ownership, because there are different vehicles and ways to participate in private investing. And so here on this slide, this is not to say angel investing is for everyone, but truly, when we're talking about learning and access, angel investing sets itself apart. You can angel invest, by the way, through crowdfunding campaigns, but even though you'll get access to information, you can't be in the room. So you're not going to be able to ask the questions, jump on investor calls, do the diligence if you're an angel participating as a direct investor or alongside an angel group. In some angel groups, and sorry, my dog's clearly very excited about this discussion, some angel groups will not give you that access that we We allow all of our members to be a part of, hold on, Bina, hey. Sorry, guys. It's the work from home. But anyway, we allow any of our members to be a part of these rooms and these discussions. And so if you are investing in a VC fund as another form of investment, again, you're going to get updates on what's happening in the portfolio and what is the thesis of the fund managers. But are you going to be in the rooms with the founders? Are you going to be making the decisions around deals? No. Right? By the way, love that you can allocate to women-owned VCs. I love that you can allocate and give via crowdfunding, but just recognizing the difference. There's so much you can learn when you're investing alongside others and when you're investing in a way that really gives you access. And by the way, private wealth and financial advisors absolutely use them, right? But you know what they're doing is they're allocating your portfolio based on age, risk tolerance, all these things. But they're not saying, oh, that's a company that we know that you really care about because you had, these health issues in your family, or as a woman, there were these gaps. You can make decisions to invest in companies that are really meaningful through Angel, and your private wealth manager, your advisor, they're not going to do that. They are going to work with you and they can give you some insight on how might you want to think about allocating an Angel portfolio, meaning, I have a net worth of $1 million. And, how do you think about, what are your thoughts if I allocate $100,000 to Angel? By the way, they may not even know that much about that conversation, but it's great to have these conversations, to have the conversations about money and wealth and a plan for, what do you want to do with your portfolio? And by the way, the numbers I used typically is what people throw around, which is you don't want to allocate more than 10% of your net worth into Angel because it's risky. So back to, why you might want to think about investing. Reinventing your mindset, last point on the slide, but I would actually say it's the thing that is the aha moment for so many of the members in our group. Wow, I wrote the check. Wow, I stepped into this new power. Can't believe it. I'm doing this. I feel different. I've learned new skills. I have so much confidence. Not saying you want all the confidence in the world where, we're expecting all the deals to go to the moon, but just this really exciting change of mindset. Investing in what's meaningful, right? A path to the boardroom. So many reasons that, it can align for you. And how do angel groups work? So I have up a screenshot of how our group works, but then I'm going to walk through some different points that speaks to not just our group, but in general, how angel groups work. So there are qualifications. Most angel groups will require that you are that accredited investor based on that definition I shared earlier. We actually have a path where even if you're not accredited, you can still be a group member. You can be an investment observer is what we call it. And you can be learning and you can be on calls. You cannot be on live pitches. That is a rule and regulation based on, the Securities and Exchange Commission, but you can be a part of that learning journey. And about half of our members are investment observers, which is really fascinating. We had some young women that said, I don't have capital today, but I want to invest at some point. So we made a path. Great question in the chat. Can you get accredited in the US if you're rest of world? So I don't have so basically there's not like a test. You are literally checking a box to say, I am accredited, a self-accreditation, right? And so when we onboard members into our group, we ask you, are you accredited based on, the US definition? And by the way, we sometimes invest in companies that are not based in, domiciled in the US, but a lot of them have been. You can invest with us rest of world, and there is a process with our accountant where they can support you, but it's basically setting up a US taxpayer identification number. All right, so back to, kind of how angel groups work, which is a lot of angel groups underlying, they're saying, how do we just maximize, the amount of money that we're getting from our angels so that we can get paid out, in the future based on, successive deals. Great. Or not so great. If they're taking 25, 30% of your top performers, that really hurts your portfolio return. So we are very upfront. We are very transparent on this. We have an 18%, it's called carried interest. And it's basically for all the work and all the operations and all the leaders. Any member can be a leader in that deal. we're sharing that carried interest or that payout so that we're getting rewarded and we're rewarding folks that source the deal, led screening, led diligence, all of those things. So being aware of what are the fees, right? And sometimes it's not so direct. It's in the small print. So you definitely want to ask these questions. Deal minimums. Some angel groups say you have to do, $10,000 in the deals or $15,000. For a first timer, we'll accept a check of $2,500. And then it'll be, $5,000 minimum beyond that. And we talk about things like money and portfolio sizing and how to think about this. And, we can be there to help you learn and think about, growing your portfolio and growing yourself as an investor. Focus and leadership, is very different by angel group. Are they giving you access to, are they, allowing you a path where you can grow into what do you want to do with this capital? Do you want to be more engaged? Do you want to be more passive? Totally fine if you just want to write checks. We have a range of participation. Not all groups do. And then we have another question in the chat that was, does the definition of income, is that going to be gross or net? And that's gross. And then another question about, can you say more about what events are for investment observers if they're excluded from the pitches? Great question. So we are going to, and we have a slide that shares a little bit more about our group. So just give us 1 second and we'll get there. But first, let's talk about, some of these tips in hacking success, right? How can you be successful in such a risky asset class? First, let's start getting you comfortable with it. Let's start getting you navigating to how to think like an investor, even if you're not yet accredited. The just start line, right? It's kind of a silly one because of course, right? If you want to be an angel, you write a check, but there is a lot of times that mindset blocker. It's hard to do it, but once you do it, you are an angel, right? I'm not saying just write a check just because, but dive into the deals, find one that suits you, look at the diligence, make thoughtful decisions so that when you do allocate that first check or write that first check, it feels aligned. Learning alongside others, I think, is the most critical piece. Even if you have a financial background, if you haven't invested in angel, right? This is a new asset class. This is a new category, especially if you don't have a financial background. Invest alongside others. I'm not saying you need to invest with us. Find folks you want to invest with, right? But don't do it by yourself. It is risky and there's so much to learn and you're not going to get good deal flow. You want to invest alongside others. We host events called office hours, and that's something where you're welcome to drop in, ask questions about angel investing, ask about our membership, how we operate, all of that. And we actually have our next one coming up on Friday. Few things to remember. Inherently, this is a risky asset class. Your money can go to zero. Think about diversification. Maybe you want to build a portfolio of 20 investments or 10 investments over the coming years. Great, plan for that. Don't expect returns or liquidity. Meaning you might not be able to get your cash out. Even if the business does well, you may not have the opportunity to cash out. Typically, a women-owned business on average has over 7 years until an exit. Businesses without women on the ownership team or the founding team, over 8 years. My angel investments, on average, maybe I saw a liquidity event around year 4, but that was a liquidity event, not a full exit. Full exit, I still have money playing, for 8, 9, 10 years on some of these investments. And it's going really well, but you won't always get that liquidity opportunity or the ability to get your money out like you can in public markets. Negative selection is real. If you are just sitting there and people are pitching you deals, they're coming in cold, they're not quality. What's really exciting about our group is every person who's a part of it, that's a whole new network. And so we're looking at dozens and dozens and dozens of deals every quarter. And so ultimately we can say these 4, these 5 look not only quality, but they're most interest aligned based on our members. We run, voting mechanisms, and we're really finding, quality deals. Deal selection really matters. Expect learning, access, and opportunity. Can't say it enough. And when you're getting started and you're thinking about what's your path, there's different ways to do it. There could be alumni groups, friends and family that do it. skilled friends that, have financial backgrounds, but think through your financial situation. Not a bad idea to talk to. Maybe you have a partner that you discuss finances with, or your financial advisor, but make sure you feel good with whatever that plan is. Even if it's, I want to map a path and I want to start investing in 3 years, have a plan. And then a little bit more about, our investment group. And I said I would revisit this. We offer all different types of events in terms of learning. We have a weekly deal call. And that weekly deal call is covering things like what's happening within our deal screening and deal sourcing ecosystem. What deals are we in diligence on? Do we want to invest? And everybody, including investment observers, can be a part of the weekly deal discussion if they want. Right now, we have roughly 12 that are showing up to our weekly deal meetings from over 100 members. The only thing observers cannot be a part of is live pitches. And they can't obviously allocate, capital or have interest in allocating capital around businesses that we're investing in because they're not necessarily accredited. But everything else they have access to, and they have access to the recorded pitches. So they very much can still be a part of the conversation. They can still be a part of screening and diligence and all the deal making. And a few things to think about, right? In addition to that, there's access via, we do member calls, we do, virtual networking events, we do learning events. And so it's not just about that weekly deal room. We do additional events and discussions on top of that, but it's learning alongside others. And it really is that experiential learning. It's not just theoretical. It's not just me sitting here saying, hey, this is a deal. It's you actually learning alongside live deals, even if you're an investment observer. So I think that's something that's also really unique about how we operate. And we also have the opportunity for, members to raise their hand and say, I'm interested in board or advisory roles. We have a placement mechanism where we can actually place fractional execs or, make recommendations to say, hey, guess what? We think Lisa or Gina, would be really good for that board alongside our investing dollars, or maybe we didn't invest, we can still make those recommendations. And finally, think about sponsorship, meaning your employer may have learning and development dollars. And this is something you absolutely can think about allocating those dollars towards. Our members hail from all over the place. We have a portfolio of, well, I guess it's shown up on this slide here. Right now, it's 60% women owned. That number is really going to go up because when we started, people didn't know who we were. Now we're seeing so much women owned deal flow. It's amazing. It's brilliant. And guess what? When we invest in a team and they don't have the diversity, they don't have representation, we're not going to invest if they're not actively investing in good culture, and if they don't truly care about gender equity, and they're not actively, making moves to get women into executive leadership roles and board positions. But all different verticals, we're basically vertical agnostic, and the majority of these have been at the seed plus stage. So you are welcome to, ask questions. I know I covered a lot. This is really just about kind of planting some of those seeds. We have an upcoming event called Office Hours, which we host regularly, and it's a great place to ask more about membership and getting involved. But I am still here. So if you have any questions about angel investing or anything that I said today, I welcome it. Please feel free to come off mute, throw on your video, or you can drop it in the chat.